Hello, everybody. Welcome to the Technical Analysis webinar this evening. My name is Troy. I'm a Senior Account Manager with Avatrade. I'll be leading the session. Before we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you very much. Looks like we're up and running just fine. If anyone runs into any issues, just let me know in the chat box and we'll take care of it. As always, keep in mind, all trades have their level of risk. Obviously, you manage risk in different ways with stop loss usage or hedge positions maybe that you can put on occasion, which we can go over those concepts in the session today if you'd like. Also, you can manage risk with Avaprotect, which is a unique feature found only on Avatrade's app. The Avatrade Go mobile app, Avaprotect, allows you to protect against losses for defined time periods for a small premium charge when you open the trade. And so it's a unique way to manage risk. It's available on our web trader platform and also on the Avatrade Go app. And those platforms allow you to have these special features while trading on your MT4 and MT5 accounts. So it's like a user interface over top of your existing MT4 and MT5 accounts. Very nice. If you haven't checked it out, you should. We'll take a quick peek at it in a little bit to give you an idea of some of the features on the Avatrade Go mobile app and the web trader. Now, as I was mentioning, obviously, trading on CFDs in the Forex market in general, spread betting, options, they all have risk, but while no one trade is guaranteed to bring you profit, each and every trade that you make certainly has the potential for a nice profit, which is why we're all here. So the idea is to go about things managing your risk, but also going after potential profits in a way that hopefully the returns end up more than your losses at the end of the day, end of the week, etc. And so we'll go over some, from an educational perspective, some ideas about how to go about strategies using technical analysis. We'll take a look at the fundamentals as well before we get on my demo account and look at the live movements to work out some technical analysis strategies. So the idea here is from an educational perspective, and not to be taken as financial advisement or anything like that as we go over the strategies, but from an educational perspective to hopefully add to your knowledge base, your strategies that either you're starting to build or have already built to improve upon things enough to make the difference to go from if you're struggling to find profits to start making profits, hopefully, and if you're already making profits to hopefully improve upon that return by just adding little tweaks to existing strategies or building a nice foundation for new strategies. In general, what is technical analysis? And it's good to go over these concepts even if you're a seasoned trader joining us, or if you're new to things, that's okay as well. And what you'll find with Avatrade, those of you that are new to Avatrade, is that you have a lot of support. You can have an account manager assigned to you. There's a lot of education and helpful things along with our home-built platforms and mobile app that assist as well. So what is technical analysis? Well, basically it's looking at the historical movements on the charts, the candlestick charts in particular, to find hopefully repetitive patterns that by looking at the history and studying what has happened in the past can help you predict many times what might happen in the future. Now, while what happened in the past is obviously no guarantee to repeat itself in the future, it certainly can help when you start to find patterns and trends and build that into your strategy of where to find entry points, where to find exit points. What you'll find as you look at the candlesticks enough is they start to almost look like music notes, where you see repetitive patterns, a certain tempo, And then you can find spots where the tempo changed. And then you have predictive movements like breakthroughs, whether that's breaking through a resistance level or a support level. It would be kind of like when the music notes change their rhythm or their pace. And so as we go along, you'll get more and more of a feel for what I'm talking about in that regards. Now, indicators are one way to assist your manual methods of technical analysis. Technical analysis many times is done manually, and we do that a lot in the webinars where we're drawing our own lines, whether they're trend lines, support lines, resistance lines. And if this all sounds new to you, don't worry. We make it simple as we go through the strategies. Now, where do indicators come in? Well, sometimes to just solidify your ideas. You know, if I throw Fibonacci levels onto the chart, which we've done in the past, you might say, wow, we drew our own price level lines that we thought were important, and then we put the Fibonacci lines on, and 2/3 of those lines line up exactly where we drew our important price levels manually. And then maybe that builds your confidence in those particular levels more than the others. And so this is kind of how I view indicators as being a supportive mechanism. They can't adapt to the fundamental news. They're only looking at the technical analysis on the chart. So you actually can be smarter than the indicator. You can do your technical analysis in an adaptive way, adapting to the latest headlines to have a preferred direction that you want to trade, whereas the indicator is just purely technical based. It's looking and it's telling you, oh, it went up enough, maybe it should drop now. It went down enough, maybe it should go up now, that sort of thing. Whereas you might prefer one direction over another if you know which way the wind is blowing, so to speak, with the fundamental news. Okay, so let's go ahead, let's take a look at some of the latest fundamental news. And as we do that, then we'll move into the technical analysis, looking for entry points for a direction we might prefer. I'm not sure what you mean about adding subtitles. If you could expand on that, I'd be happy to help you with whatever further information you need. Christomos, maybe from Greece. So let's take a look at some things. If we look at the trading platform, we can see on our main website, the trading platform options, and I mentioned Avatrade Go. So this is the Avatrade Go app. You can download it from the Google Play Store, the Apple App Store. As you can see, it has a feature on it called Ava Protect that allows you to choose different time periods, whether it's by the hour or by the day, to protect your trade against any losses during that time period. So you pay the premium cost up front, which is relatively small compared to the potential profit and also the potential loss if things crash the wrong way. And you know, if you pick 2 days of coverage on gold, by the way, it's available on gold, silver, and FX pairings. If you had Ava Protect, let's say on gold, maybe you have a 100-ounce position if you have a sizable account, and perhaps gold shoots, I don't know, $50 the wrong way, right? Times 100, you could be down, what, 5,000 USD in a short period of time. If you had coverage on that, when that trade closed, if it closed within the covered time period, any losses would be added back to your account. Then you could reopen from a better price. If you closed it with the protection still running, maybe you saw the movement getting near a support level and you said, oh, you know what, I think it'll go up now for sure. So you could close it, take the payment from the coverage and reopen. Okay, so Ava Protect you can use in different ways, build into your strategies, build into your risk management. And Andrea, no, Spanish would be another webinar. We do have some in Spanish, but not this one. This is English based. Sorry, Andrea. Okay, Amir, we will look at oil. We're going to look at oil, okay? Oh, why is the protection not available on oil? Good question. Okay, so right now it's available on those assets that are traded on what we call spot prices. Oil is traded on futures contracts. Right now it's only available on FX, gold and silver, because those are traded on spot and not on futures contracts. Very good question. I believe in the near future we will have more assets available on AvaProtect. Okay. What else is good about the app? If you put your take profit or stop loss mark, it calculates for you based on your trade size, your risk and your potential profit to those price levels that you enter. And so, and it converts it to your account currency. So if your account is in pounds or euros, you're trading on gold or USD JPY, and you take a certain trade size and you put your stop loss mark, it's hard to manually calculate sometimes what your risk is. The app and our web trader platform have these features. You enter the stop loss price, it tells you, here's how much you stand to lose if the movement goes to that price with the trade size you have. If you change the trade size, it immediately adjusts. It tells you the new risk or the new potential profit. Okay, so that's one aspect. The other option to use those features would be if you log in from the main website to the web trader platform. Okay, the web trader platform has those same tools that you see here. Okay. Maybe in another webinar we'll log in on the web trader. Some of you are asking to see that up close. Please talk to your account managers about that for now. In some upcoming webinars, maybe I'll set it up. We'll look at the web trader platform as well. It's not active in all regions around the world, so we've been onboarding those tools and those platforms in more regions. And so soon, because it'll be more globally available, we'll have some webinars where we'll be able to look at those platforms as well. But for now, talk to your account managers. Also download it, play around with the features. And if you don't have the web trader platform when you log in, you can ask for it to be activated on your account in most areas around the world. I have one person complaining about not hearing me, but I know everyone else is okay. So let me just let that person know. I'm going to type a message to check his audio. Okay. All right. So that's that. Very good technology, very good tools. Only found at Avatrade with the Avatrade Go and web trader platform. So I would say check those out. Check out the features. If you have questions, contact your account manager. And like I said, we'll try and work more and more of that into the webinars as well. Okay, real quick fundamentals. Stimulus bets drive Wall Street higher. It seems to change every day, doesn't it? This idea about more stimulus in the US. The Democrats and the Republicans are using it as a political tool rather than passing this thing. A lot of people are hurting. A lot of businesses would like the extra stimulus money, but they can't seem to agree on an amount. So the optimism today is, hey, they think now that maybe they will reach an agreement. Okay. An article says Trump is pushing for an even larger amount, pushes for major deal, but the Republicans are more fiscally conservative and they don't want $2 trillion again or $3 trillion. All right, Roger, I'm glad you can hear things fine. And the Democrats want the big numbers and the Republicans want to be more fiscally conservative. So they're bickering, but today it's optimism. Wall Street's betting that, hey, maybe they will get a stimulus package passed. We see here the futures were red or green all day, meaning positive optimism. When the markets opened, they opened in green. The non-futures, the actual indices are in the green, and volatility is down over 2%, which is pretty significant. Volatility is down. This VIX index, the volatility index, it is referred to as the fear index. So usually when you see fear is down, especially when it's down a significant amount, like 2%, 5%, you see the markets are green, rising. Makes sense. Lower fear, lower volatility, markets are rising. And the headlines tell you why. They think stimulus is coming. Welcome, Tracy. I'm glad you're with us. If you're new to things, don't worry. We'll go slowly enough for everybody, and I know you'll pick up on things with the help of your account manager as well. So Google, not happy about this. US looking to break up the Google giant potentially. accusing it of potential antitrust law violations, saying they're too big of a monopoly the way they operate. Google thinks otherwise, obviously, but that could make things shaky for Google on the charts potentially. What else? Economic calendar. Some good numbers out of the European Union. We'll take a look at the technicals on the chart for the euro soon. We see PPI numbers higher than expected. They were expected to be negative, and they were actually up in the positive, almost 0.5%. Current account, that's like the trade balance, and it's another way of saying trade balance, current account. We see on the economic calendar, better than expected. Nearly 20 billion in the positive with the imports versus exports. So, or exports versus imports, I should say, to be in the positive side. So also building permits, good out of the US. All of this is helping the optimism. Yeah, Mario, the NASDAQ's moving quite well. The building permits were better than expected. Okay, that's really been a big story in the US. That's another sign of the recovery occurring in the economy. And usually what's good for the US is good globally as well on the markets. The case looks to be that today. Housing starts, month over month, went from last month, negative 6.7% to up almost 2%. Another good storyline there in the housing industry in the US. Housing starts for the month, not comparing month over month, but just for the month, up over 1.4 million new housing starts. So the housing industry is picking up. While that number missed the expectation, it's better than the prior month. Okay, better than the prior month, showing expansion of the economy again in the US, especially in the housing industry. That shows people feel like they're doing well. If they're buying houses, more houses are starting to be built, contracts are signed more and more. That means people must feel somewhat confident about their financial situation, more so than you'd think through a pandemic. Okay, so it's interesting to see all this economic optimism and positive numbers coming out during a pandemic, right? So keep that in mind as we go on the charts now. So let me pull up my demo here. We've got the live movements going. Here's the Dow Jones. We see on the 1 hour candles, upward movement, right? Obviously, there's the upward movement. And then, you know, if we want to only look at today's movement, maybe I get rid of this line here or slide it over a little. And we can see there's the little alleyway, the little uptrend or large uptrend that's been occurring today. Okay, here's the 19th, here's the 20th. So this is today, up, 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 up all day on the Dow Jones. We could look at the S&P 500, we could look at the NASDAQ. It's the same thing. Very similar movements. We also could look at the DAX, the CAC, the Nikkei, a lot of other indices around the world, and there's a lot of positive momentum today. So when we start looking at price levels, then we're on the 1 hour candles. I see a support level here. Okay, support, it hit and went up, hit and went up. This was on prior days. Then it took a lot of momentum. Look at the size of these two candles. It took a lot of momentum to break below this support level. Okay, for those of you that are new to this, support is an area on the chart where the price has trouble going below, where it hits and goes up, hits and goes up. It takes a lot of momentum to break a good support level, and that's what you see here with what we call a breakthrough candle. A candle that's larger with more momentum than the average candles around it, and that's what this was. It took a lot of momentum to break below. Well, guess what? After bouncing off this support level down here, you see, support, it hit and went up, hit and went up. So once it went through this support level, it quickly went to the next one and bounced. You see that? It bounced right off this support level. So, you know, those of you that were trading technically would have already bought from down here. Okay? A purely technical trader would have bought off this support level because look at how it bounced the last time off of here. So it took momentum to get there. It broke this support and it bounced yesterday into today. And up it went all day. Look, it broke above this old support level, which should have been resistance. It took a lot of momentum to break below that level right here, and it just broke above it. So now that it broke back above that, this should act as support again. According to support resistance theory, this should be a support line now because it broke back above the old support, which should have been resistance once it broke below. So now we zoom in. We say, where's our opportunity then? The opportunity is that this should be support now, okay? So if you say, okay, let me buy on this asset, okay, fine. So you buy, okay? Then you say, okay, momentum's up. It could pull back short term, right? Eventually, any large climb has a pullback, right? If you believe the momentum is up, which the sentiment is, right? We see the uptrend, we see the breakthrough of the resistance level, the old support level, so it's back above that old support level, and we saw the news stories and the headlines, and we understand it's positive sentiment. I have another person saying no sound, so I'm just going to type for everybody. Audio is good. Check on your side if trouble. Okay, there we are. So where would you put your stop loss then? With this movement, we see it's rising. If you're a scalper, you could already be in and out with a small profit, right? Riding the wave, riding the momentum up with the positive sentiment we see today. Technically speaking, where might you put your stop loss if you're using one? Not everyone trades with a stop loss. Where might you put your stop loss on this if you were going to be patient and not close like right now in profit? If you're not scalping but waiting for it to climb further, where might you put your stop loss? Yeah, just below the support. I'm with you. Sierra, I'm sorry if I'm mispronouncing your name, Charlie, and everybody else. So if it's a true breakthrough, we might see a candle like this one that it took this much momentum to drop. Look at the size of that drop once it broke the support. So once it goes back above, it might take the same momentum. You might get the same size climb. Okay, so if it's a true breakthrough, we might put our stop loss just below the support because it shouldn't go back below if this is a real breakthrough. So stop loss might be 28,290 or 292. Okay, so stop loss. By the way, I could have put the stop loss in the beginning, but I didn't want to miss the movement, right? So I took it right away. I'm going back and putting my stop loss. 290, let's say. Okay, so if I do that, then you see my stop loss is low enough that it would have to break back below this support level I drew. This line was my support level that we thought was so significant, that it took so much momentum to break. Now that the momentum's up, why should it break that support and go back below like that again? Unless really bad news hits, right? So, okay, I'm glad your audio is up and running. Great. So the stop loss is down here, 28. I put 28,290. You could put something different, but you get the concept. It's below the broken, the support that it just broke back above. It would have to have a change in momentum enough to break that support level before I would give up. That's the concept here. Now, again, if you're scalping, you could close now. $12 profit, $15 profit. You understand that you only have to gain 1% per trading day. Let's say there's 20 trading days in a month. You only have to gain 1% per trading day to make 20% gain a month. So small percent gains, if you're opening and closing on scalping moves, okay? That was a small trade. I took 0.0 whatever. It was a micro lot trade. If I had 1,000 in my balance, I just gained over 1% with that move. One little move. And why did it go so quickly the way we expected? Because we looked at the momentum first. We looked at the fundamentals real quick. We got an idea that, hey, fear was dropping today. on the volatility index. The futures are green. We looked for a broken resistance, which was this, and we said, boy, to get below it, it took a lot of momentum. So to get above it, it might do the same thing if it breaks through and goes back above. And that's what we're seeing happening. Okay, this might seem overly simplistic to some of you, but look how well it can work. That's the idea. Sometimes the best methods are simple methods when it comes to technical analysis. Did you even have to know why it broke this resistance? Did we have to look at the stories? A purely technical trader would say no. All I have to do, what kind of pending order could you have had here waiting for this to break through? What kind of pending order would have bought from just above this resistance, this old support, as this was coming up, it broke through? What kind of pending order would have triggered automatically to buy? What kind of pending, Catherine? No, it's not a dumb question. No, not a buy limit. Buy limit buys from a lower point. A buy stop. Good, Georgios. A buy stop would have bought right as soon as it broke through above that old support. A buy stop would have bought. How do you do a buy stop? Let me show you. Change it from market execution to pending order and buy stop for the type. And if you had put your price, the at price that you wanted it to buy, if it broke above that line, you'd have gotten in at 28,345. Look how far in profit you'd be already. Simply putting a pending order, I call them trip lines in the market, putting a pending order, waiting for this breakthrough. And you didn't have to know why it broke through. You didn't know that the story would break, that, hey, there's optimism about stimulus again in the US. But you just put those trip lines above major support or resistance levels on one side or the other, knowing that, hey, look, in the history, once it broke, it really plunged. So you're saying, okay, if it breaks back above, it might really shoot up because it takes a lot of momentum apparently to break that price level. And so that's exactly what happened. And so when you use pending orders like that, your risk only has to be a little bit to the underside in this example of the price level. And your potential profit could be what, 3, 4, 5 times bigger before it gets to the first resistance level, which it just did now. You see this as resistance, 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 and then down, right? So now that's the first spot. It makes sense it's going to pause. So a scalper might take his profit near this first resistance level, which I already did, right? So yeah, Tunde, I knew what you meant. You said buy limit. Buy stop is when you buy from a higher point. A buy limit would have been if you were selling or buying from a lower point, meaning if this comes back down now, you could put a buy limit pending order that if it drops back down to this support level, buy from there, right? So how would I do that? New order, pending order, buy limit. If it drops back down to 28,350, 28,350, then I want to buy. Why? Because that's a major support level. We've already saw that. It takes a lot of momentum to break below it or to break back above it. So if it comes back down to that support level, you might likely get a bounce back up off of it. Unless what? Unless the headlines change. Unless the news comes out that, oh, no deal on stimulus. And then you see it come down and break the support. So here's what you can do. Buy limit with your stop loss just below the support, 28,003, let's say 320. Gets you back below that support level. And the take profit could be back up where it just reached, 28,450. Okay, there's one pending order. Okay, so if it comes back down, you're back in with a buy, hoping for it to bounce back up. Your risk is about 1/4 or 1/5 of the potential profit if it doesn't break that support level. And maybe I cheat this down just a little bit to make sure I don't accidentally hit my stop loss too close. It would really have to break the support now to hit my stop loss down here. And I'm still risking about 1/3 of my potential profit from that entry point. So if it does come back down, the pending buy limit will buy from that lower point and your take profit can be up here. Okay. Muhinda, you're asking about what leverage ratio do I recommend? The leverage is the same no matter if you're on the S&P 500, the Dow Jones 30, whatever asset you're on, whatever leverage is set on your account for that asset, it doesn't change. It's different between different assets, but you can't change the leverage on the Dow Jones. So when you say how do you leverage the ratio, unless what you mean is not leverage, but the risk to reward ratio, if that's what you're saying. And I think that's maybe what you meant. So in this example, the risk to reward, when I first entered this, the trade that I already took profit on was about 3-to-1. I was only risking a little bit to the underside of that support level, and the potential profit to the first resistance was about 2 to 3 times that distance, right? That's great. It doesn't always work out that way, right? In this example, it's about 2-to-1, maybe 3-to-1 on this pending buy limit, right? And sometimes you could do the opposite, right? Some strategies put the stop loss further away and they take profit closer. Why? Because you expect at least a little movement, you get out with a scalp. And the stop loss being further away lets you be more patient. So there's no one rule, Muhinda, on the ratio between the potential profit to the risk. Now, certainly the way we're setting things up, if you're doing opportunistic entry points with your technical analysis like we're looking at, you could easily have a 3-to-1 ratio, potential profit to risk. And in that instance, you could be right only 40% of the time and still profit. Okay. Siabonga, you're at Avatrade, your account managers do not trade for you. Okay. It's not something that regulated brokers do for clients. You might come with a third party. You might use something like Zulu Trade or DupliTrade, some other third party that offers those services, and you can link to your account with us. But your account manager at Avatrade will never trade for you. Okay? They can help you with, like I'm helping you, but I'm not placing trades for you. You're seeing the information, right? You understand the information and you trade, not because I say so, but because you understand the information and you're confident about it and you think it's right to place the trade. And that's always how you should place a trade, is because you think it's right. Now, it's a different story if you're connected with a third party that's linked to your account and doing auto trading for you. That's a whole nother idea. Okay. All right. So you see exactly like we expected. You see the resistance? See how rapidly it climbed? It's not by chance that it stopped climbing right there. Didn't we just predict that? We said this is the next resistance level. Look at it. Look at it. Try and pull back now. You see right here was the old support. Okay. It's old resistance over here. Resistance, 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 resistance. It's old support here. Old resistance here. So as soon as it got to that price level, you see I drew that line. There it goes down. Okay. Okay, so very good points, very good questions. So here's an example where you could sell. Couldn't you sell off this resistance? That's a resistance level. You could have decided to sell off of this. Why do some people not choose to sell off of a resistance level like this? What might be the reason? Because the fundamentals are telling you to go which direction right now? The fundamental news is telling you to buy right now, right? Low fear on the market, positive news, positive sentiment about potential stimulus. That's why the market's rising. So remember I said indicators are not as smart as you? This is an example. The indicator, when this got up high, would absolutely tell you should sell now. The movement's overbought. The indicator would look back and recognize this resistance level and say sell. But is it as likely to come shooting down to the support level as it was to go up to the support level? Probably not, because the sentiment is working against you on a sell position here. So technical analysis is great. Indicators can help. Indicators aren't as smart as you. You know now that there's positive sentiment. you know that this breakthrough was a great entry point, and we looked and we saw that that paid out. We took a profit on the simulated trade. You also know that this is not shooting back down off that resistance so quickly. Okay, Charlie, yeah, the trend is your friend. I like that phrase. And also, the sentiment is usually your friend. Okay, the sentiment is your friend. Volatility goes two ways. It can be declining volatility, like today, which causes markets to rise typically, or increased volatility, which causes markets to drop usually. Someone entered late and asked, what about volatility? I think it was Catherine. How did we know about the volatility? So when we were here, okay, when we were here, we were looking at the volatility index, the S&P 500 VIX. The VIX index looks at all 500 companies on the S&P 500, okay, and measures the volatility of their movement. And usually when there's high volatility, there's a lot of fear on the market, and the markets are dropping. And when you see volatility is dropping, usually fear is dropping and the markets are green, like we see today. Volatility is down over 2%, markets are green. Fear is dropping, that's what this means. Volatility index is in the red. Usually that means markets are in the green, and that's what's been happening, okay? So volatility doesn't have to be high to trade, but what helps trading is when volatility is moving one way or the other, meaning dropping a lot, which it's doing today, down 2.5% now. As we watch it, it just dropped more. So large movements in volatility, whether rising or dropping, lead to predictable movements on other assets. By the way, you can trade on the volatility index as well. Okay, Mario, why do you say USD JPY? That's a good one. And I like Australian JPY as well. Why do the JPY pairings, help you understand volatility and fear on the markets? What's the yen considered like gold? What kind of asset? Mario knows because he suggested using the JPY. A safe haven asset, right? The yen, the Japanese yen as a currency is like gold as a commodity. It's considered a safe haven asset. So when there's fear on the markets, the yen tends to strengthen and pull other currencies down. And when there's optimism on the markets, the yen tends to weaken and other currencies tend to rise against it easier. Why might I say to pair the Australian against the yen? Let's take a look at that. We've spent enough time, I think, on this indice. And by the way, the strategies we just went over on this indice, you can do on any asset. Doesn't have to be on this indice. So that's why I spent enough time to fully understand it. Where's the Australian JPY? There it is. Why did I know the Australian was climbing against the yen? And no, I didn't look at it. Why would the Australian be going up against the yen? Positive sentiment today means the yen should weaken, right? And why would the Australian in particular strengthen when global markets are happy? When the US and China are doing well, which they are with their global, with their recoveries from the global pandemic, why is that good for the Australian dollar? Why does the Australian dollar strengthen as the yen is weakening? Yeah, there was a support level that broke, no doubt about that. So technically speaking, this support level that broke, or resistance level, I should say, okay, this was resistance, resistance, resistance. It broke through and up it went further, okay? Same strategy we just looked at. But beyond that, economically speaking, Australia exports iron ore, coal to countries like China. The number one buyer of exports out of Australia, China, right? As China's economy goes, so goes the Australian dollar many times. And so because the US and China's markets are climbing today, there's been good reports about China getting up and running just like the US economy. So that makes the Australian dollar bullish. If you understand that, then when you came to the chart to do your technical analysis, you'd say, okay, I'm pairing the Australian which should be bullish today, should be rising today, against the yen, which should be weak today because it's a safe haven asset. So I'm pairing a strong horse against a weak horse strategically. Now that I have that idea, I come and I do my technical analysis and I say, boy, if I put a buy stop above this resistance, once it broke the resistance, look at it climb. It continued to go up. Couldn't we do the same thing with a continued buy position on this and put our stop loss below the support level? Couldn't I say, let me buy on Australian JPY? Okay. And I know I'm in late. It's climbed a lot already. So maybe I better be prepared that this could pull back a little. I could have done a pending order, right? I could have put a buy limit down here closer to the support level. That way, if it pulls down, then I get in and hope for the bounce off the support. We did that with the other example. So now I'm using a different example. Yeah, we'll jump on gold and oil next, I promise. Gold and oil next. So I'm using a different strategy because we used the buy limit strategy already on the Dow Jones when we were looking at it. So this strategy, I'm saying, okay, I'm going to be less patient. I'll buy now, even though it's above the support level a bit. And so in this case, I have to put my stop loss a little further away to get below the support level. So maybe I put it, 10 pips down, which still isn't too bad. That's a pretty short distance. So let me add my stop loss. Again, I'm doing it after the fact. I could have done it as I opened it. So I'm putting my stop loss down 10 pips for my entry point. So I entered at 74.60, so I'll go 74.50. Oops, I need to put the decimal. Or maybe 74.45. Be a little more patient, okay? So my stop loss is below the broken resistance that it's above now. It would have to take a major reversal and breaking of that support level now to hit my stop loss. Now, where might I take profit? Since I'm being more patient on the way down and I'm, 15 pips to my stop loss, then I'll be more patient on the take profit on this one. There's no reason why it couldn't challenge this resistance level up here if truly there's a lot of optimism today. So patient to my stop loss, I'll be even more patient to my take profit. So 74.89 would be just before that resistance to take my profit before it finds something to stop it. So take profit 74.89. Now, again, I did go after a larger potential profit. My potential profit's about double my risk, okay? I don't always set up that way, but that's what good technical analysis can help you to do if you prefer it that way, okay? All right, let's take a look at oil. That was requested. Why would oil be climbing today? Yeah, 3-to-1 ratio, Mario, is nice. Then you could be right, 40% of the time with entries like that and profit. So yeah, there was another resistance level there. Someone's suggesting a different price level if you want to get out sooner, right? If you wanted like a 1-to-1 ratio or even a shorter distance to your take profit than the stop loss, which then raises your win percentage typically. You have some options there with take profit. Okay, so why would oil be climbing today? It's obvious that it was going to break the resistance. It was obvious this would break. Isn't it doing the same thing as all the other assets? Economic optimism. If there's optimism that a stimulus deal will come, trillions of dollars flooded into the economy, doesn't that increase demand for fuels? If the economy starts to do better, certainly it does. So that's the idea. That's what can help drive oil up. Also, as Mario is pointing out, there's an OPEC summit, right? If they're talking about oil policy and maybe cutting back on production or something, that can drive prices up, okay? But in general, economic optimism puts you in a position where you might prefer buy positions on oil rather than sell positions. And you see how that would have worked out today. You could have been buying from earlier today off this support level. There's no reason why you couldn't have bought from this support level just a few hours back. The volatility index was showing a drop in fear all day. It isn't just right now. It was dropping all day, the volatility index. So right away, the futures were green all day. The volatility index was red all day, meaning fear was dropping. So you could have been buying on this uptrend and took your profit at the first resistance level here. Then you could have had a buy stop. If it breaks the resistance, you're in again, and you'd be in profit again right now. Okay. Now you say, okay, well then it's too late to buy now. It's not too late. The market doesn't stop moving unless the market closes. Okay. Now it might pull back. Maybe it's not the best timing to get in. Maybe you want to put a buy limit just above this support level. The old resistance should be support. And you know, by the way, you could put a sell stop down here as well. Because if it breaks back below that price level, then there must have been bad news that hit. So you don't have to guess the market. On all of these examples where we're preparing buy stops and we're buying on the market, you can also back that up. Remember I said you can put trip lines in the market. You can back that up with a sell stop below that support level, because if it breaks back below it, that's a reason to sell, technically speaking. So just because right now I might say, okay, I'm going to buy on oil. Okay, I bought on oil. It doesn't mean that I can't put my stop loss down here below the support level. And if it breaks and hits my stop loss, then I have a sell stop ready to go right down here. And I could have done the same thing on the Dow Jones, could have done the same thing on any asset that just broke above a resistance level, and I'm buying on it because of the momentum up. If it breaks back below and hits my stop loss for the same reason I bought, because it broke above the resistance, that's the same reason I could sell now and switch my direction just like that. Okay, that's the idea of technical trading. And you don't have to be right every time. If you set things up like some of you have been suggesting, 2-to-1 ratio, 3-to-1 ratio, potential profit to risk, because you're getting such strategic entry points, you don't have to risk much to get to the other side of those important price levels with your stop loss. And you can re-enter in the opposite direction real quick if the momentum swings and breaks those price levels. Okay, so something I like to say a lot in trading is you don't have to be right to profit. You just have to be smart. Trade smart. Don't trade to be right. The person who trades to be right many times stubbornly hangs on to positions even though the technical analysis is telling you, the momentum changed. But you stubbornly hang on to it because you just think you have to be right. And sometimes that can hurt you in the long run. So keep that in mind. It's better to be smart than to be right. Yeah, Mario, you're making a point about soybeans and that it might be at a safe point to enter. You can find those types of entry points on lots of assets. Okay. Now, I didn't enter a stop loss on oil. Where would I put oil if I'm bullish on oil to keep climbing? If I'm looking at one-day candles and I think now oil will go up here, you see how I used larger candles to get a bigger picture view? It's important in technical analysis to do that. We're zeroing in on our entry point for specifically where we want to enter by looking at the smaller candles, 15-minute, 30-minute, etc. Now I need to look at one-day candles for oil to see where would I want to get out. And here's the resistance level that it might next hit. Way up at 43.5 almost, 43.3 might be my take profit on oil. Okay, so this is a more patient move as well, the opposite of scalping. So modify, take profit, 43.3 is just before the next resistance level on the one-day candles. And my, 43.3, not 433. It might take a long time to get there, if ever. Probably never. And then my stop loss, I can go back to, there's my potential profit, my take profit just before the one-day candle resistance. And if it's true momentum, if they do pass a stimulus deal, boy, I think there's a good likelihood oil could hit that price. Okay, so I'm taking a shot that the fundamental news will keep going the right way here. Where's my stop loss then? If it breaks below this support, let's say 41, okay, or 39.8, could even be down here, okay? My take profit is all the way up, almost $2 full up per barrel. So I could be really patient with this and say I'll put my stop loss not just below one support level, but below two support levels, and say, okay, I'll put my my stop loss down if it breaks below 40, 39.9. So I modify. This is a really patient move. 39.9, 39.9, not 399. Okay, so my stop loss is down here. That looks like a long distance when I'm looking at 1 hour candles, right? But when I go to 1 day candles, I see, okay, my stop loss is about half my potential profit. It's about half the distance of my potential profit. And now I'm being very patient with my stop loss because it would have to break below the support level that it's above here, and it would have to break below this support level, and it would have to break down further before I give up on it. Okay, so it's an example of a patient move. Okay, so on the 1 day candles, I see oil could rise easily into the 43 range if that stimulus deal passes. Okay, so limited risk, nice potential profit. It's what we opened with, was managing risk, right? Managing your risk and your potential profit. So that's, I think we'll call it quits here. We've been going for 50 minutes, near an hour. I'm sorry if I didn't get to all the assets everyone asked for. I know someone asked for gold as well. We're just a bit out of time. By the way, for any of you that want to go back and look at the recordings, they're found on our YouTube channel, Avatrade's YouTube channel. You can ask your account manager for a link. There's a section specifically for English-based webinars, and they're all there. You can go back, look at all the strategies we've used over time. Today's session will be uploaded by tomorrow to look back at it as well. Good question. If you're using MT4 on Mac, the way that it would work, MT4 is a Windows-based program, so it doesn't work on the Mac operating system, but you typically have a partition on your hard drive with a Mac. You could have Windows loaded on the partition and run the MT4 on the Windows partition on your Mac hard drive. That would be the way to do it. Otherwise, just make use of our web trader and our Avatrade Go mobile app because they work very well. But if you specifically have to have the MT4 for, say, a robot that's programmed in the MT4 language, then yeah, partition your hard drive, download it that way. Okay. All right, everybody. Thank you for joining. I've got to go. Thank you for the participation, the nice questions. It's much appreciated. It not only helps you, but it helps others when you ask good questions like that. So I hope to see you in the webinar later this week is on Friday. In the future, we're going to try and stick to Tuesdays and Thursdays. This Friday's earlier in the day, around 11 a.m. London time on Friday. Okay, thanks everybody for joining. Good luck with your trading.